Hello, I'm Paul Flynn, Managing Director and CEO of Whitehaven Coal, and welcome to this short overview of Whitehaven's results for the first half of financial year 2022. Firstly, our safety performance. As one of Whitehaven's guiding values, the safety of our people, workplaces and communities around us come first. We are committed to zero harm and continue to work towards it. On a 12-month rolling basis to the 31st of December, our TRIFR rate, which represents the number of recordable injuries per million hours worked, was respectable at 6.1, but we know we can do better. We need to keep pushing hard to achieve a zero harm environment. The first half of financial year 2022 has delivered record financial results, with record coal prices translating into strong cash generation. The first half operationally was not without its challenges, with COVID impacts in recent months leading to elevated absenteeism, which we had been able to avoid prior to Omicron. As previously reported, significant rainfall in Q2 disrupted operational rhythm initially, but also resulted in flooding that temporarily restricted access to the mines for 2 weeks. However, even with these recent disruptions at our operations and across the coal supply chain, we have posted record half-year earnings. For the first half to December, we have recorded EBITDA of $632 million and net profit after tax of $340 million. The resulting free cash flow was over $500 million. Coal prices reached record highs during the period and finished at elevated levels, driven by strong demand for high-quality product in a supply-constrained market. Those elevated coal prices delivered strong operating cash flow in the period, enabling us to reduce net debt from $808 million at the 30th of June 2021 to $403 million at the 31st of December 2021. As we mentioned at the full year FY21 results and again at our 2021 AGM, our priority was and continues to be to reduce our levels of debt. We are on track to completely repay our senior debt facility and be in a net cash position in the coming weeks. Considering the strong cash generation and our robust balance sheet, the board has declared an interim unfranked dividend of 8 cents per share and approved an on-market share buyback program capped at 10% of issued shares and $400 million in total to be executed over the next 12 months. Now, I'll briefly touch on our operations. During November and December, heavy rains in New South Wales caused localised flooding around our operations, in particular at Maules Creek and Tarrawonga. Fortunately though, our extensive water management systems at the mines performed well with no substantive damage to the sites. Unfortunately, road access was cut, meaning our workforce was not able to access the site for 2 weeks, particularly at Maules Creek. Werris Creek was the least affected by weather and performed as expected during the half. While at our Narrabri underground mine, there was a scheduled longwall relocation from panel 109 to 110, which is the last of our deep panels in the northern side of the mine. These factors contributed to the first half managed ROM coal production of 8.4 million tonnes and total coal sales of 8.6 million tonnes. During the first 6 months of the financial year, Whitehaven achieved a number of key milestones on our development projects. In September 2021, the Federal Minister of the Environment approved the Vickery Extension project under the Commonwealth's EPBC Act. Last month in January, the New South Wales Department of Planning, Industry and Environment released its project assessment report stating that our Narrabri Stage 3 extension project is in the public interest and was approvable. The project has been referred to the Independent Planning Commission for final determination, which is expected within this financial year. Our Queensland coking coal project, Winchester South, recently completed the public exhibition phase of the draft environmental impact study, and the project team is working with the Office of the Coordinator General to respond to the submissions received. As you can see, we are continuing to progress our development pipeline, but work is proceeding cautiously and in line with our strict capital allocation framework. Looking forward to the second half of the financial year, we expect to see the continuation of strong coal prices given underlying demand and the limited supply side response. In addition, we are anticipating a stronger operational performance and are guiding full year ROM production at 19 to 20.5 million tonnes and coal sales of own produced coal of 17.2 to 17.8 million tonnes. We anticipate the second half of FY22 to be even better than the first half, allowing for further returns to shareholders. And before I sign off, I want to thank all of our shareholders, employees, service providers, and the communities in which we operate for your continued and valued support. Thank you.